Hello, good evening, everyone. Good to see everyone once again. My name is Alex from MarketWise Asia. Today it is the 2nd of September 2022, the start of a new month over here. Thank you so much for joining me today on a Friday evening. And of course, thank you so much for being here and being on time today. And if you can hear me loud and clear, please say a hi to me in the chat and also in the comments wherever you are. This live stream is broadcasted on both Facebook and also on YouTube as well. So I'm very friendly. So please say a hi to me in the comments in the chat. Okay, I was just looking at my position just now on the market, waiting for the live to get started. Okay, so let me take a look at the comments right now. Hello, Amanda. Hello, Mark. Hello, Valerie. Hello, Kyla, Waylun, SJ, William, Adrian, Ethan, Sivarupan, HJ, Stephen, Jenny, Chu, William, Kenny, Ihua, Avery, Alex, Yao Lip. Alex, good to see you. Same name. You must be very smart. Just kidding. Okay. All right. So yeah, Li Yet Ming, Tommy, Kok Leong, there's a lot of you here. Thank you so much for all your comments, Pei Wen, Josh, Wei Chun, okay? So once again, if you just join me, say a hi to me in the comments in the chat, give me a like, share, or comment. Liking is free, doesn't cost you money. So right now, we have already 120 people in the room right now, both on YouTube and Facebook, but only got 18 likes leh. Okay, can give me some likes or not? Liking is free, doesn't cost you money, okay? But it tells Facebook algo that enjoy our content and to see more of our content in the future. And it also really help YouTube as well to really spread out to other people as well. Okay, so do give me a like, share, or comment over here. So let's kickstart this session right now. Once again, I hope to finish this session within 1 hour. I hope to do so, okay? So not to keep you guys too late, or else I can continue until 3 a.m. All right, so let me share my screen right now over here. Yep, today, as usual, disclaimer first, whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. So my opinion doesn't mean that I'm right. So please do your own due diligence. Okay, Kenna? Okay, so first thing first, before I really kickstart, right? Once again, some simple announcement to let you guys know. I think most of you here should know already. In case you don't know, if you are new to MarketWise Asia, right? So we have this Market Insights Virtual Summit that's coming up on the 29th and 30th of October. That is in about 2 months time over here. All right, I posted the link in the comments. Thank you so much for all the comments still coming in, okay, like Zaki, Cheng, Tai Seng, Mary, SK, and such, okay? Thank you so much. So this Market Insights Virtual Summit, okay? So the keynote speaker is Tom Basso, American hedge fund, pretty famous. Okay, I'm sure you know him, and he's also one of the original market wizards. We'll be talking about the all-weather portfolio for the last lap of 2022. So happening on the 29th and 30th of October 2022. So pre-register your interest right now. So as usual, I will send you bonus materials and reports, okay, earlier than the rest of the other people if you pre-register right now. So it is very simple. Just enter your name, email, and mobile. Mobile is just for SMS reminder if you are residing in Singapore. So no spam, no nothing from us. Okay, and just click register me and you are good to go. So once again, I'll key in the link in the comments. You should be able to see in your comments or in the YouTube chat as well. Okay, so do pre-register right now. So also we have our Telegram channel and also our YouTube channel. So do register, do subscribe to our Telegram and YouTube channel as well. So we hope that whatever my information that I share with you guys is omnipresent. That basically can if you can't view it in Telegram, you're able to view it on YouTube and other channels as well. So yeah, and remember to also to like our Facebook page as well. So yeah, this is the last thing before we move forward over here. Do subscribe to our Telegram and also on our YouTube channel. I posted the link in the chat. So fantastic. So right now we have about 170 people in the room. I think the more will be streaming in because we are just getting started only. So today is a very green day right now. Okay, so how many of you have a long position today or yesterday? Just type, long in the comments, LNG, LNG. Okay, if you have, just type long. Yes, I have, but it is a counter trend trade. Just to let you know, I'll go through with you a bit more later. Okay, so yeah, today is pretty green right now. So yeah, so let's start this session right now. So remember to give me a like, share, or comment. Okay, so I think by now you should know that last week we have this Jackson Hole FOMC meeting, right? So this is the event that caused the market to dive, to slide, to crash, whatever you call it, right? So during the Jackson Hole FOMC event, right? So the Fed hawkish stance on the monetary policy, which means that Jerome Powell, is quite insistent that he will continue to increase the interest rate to keep inflation down, So I mean that right now you should know that's why the reason the market kind of corrected quite a bit from here. So if the inflation doesn't go down, okay, the Fed will hike interest rate aggressively, okay? So inflation must go down, okay? And I can see a few comments over here like Pat, Benson, Josh, Alex, Stephen. Okay, Stephen said dead cat bounce. Okay, all right. So Alex long, Josh they all went long as well. Okay, so I'll go through a few things over here. Okay, so today's description for the YouTube and also on the Facebook, I mentioned that September is historically a very not the best of the month, the weakest of the month over here. So yeah, I'll share with you right now over here. So this is the seasonality sectors over here. I mentioned in my previous Facebook live also lah. So if you have been watching my live, right, you should know over here. You see that, okay? Typically in September, not a very good month over here. All right, October also pretty neutral, not the best of the month over here. Okay, until November, December, when typically end of the year there is a Santa Claus rally and such. So whether this month, September, is going to be weak or is it different this month or going to be bullish, I will share with you my opinion later, just opinion analysis. Doesn't mean that I'm right, okay, over here. Okay, so I also want to talk about the bonds market also because the bonds market will determine, okay, where the equities, the stock market will be heading to. And of course, the bond market is very in line. Basically, it's the, I'm talking about the yield, the interest rate, the yield. Okay, so talking about that, right, the bond market, right, was actually virtually flat during the Jackson Hole speech, which means that, okay, the bonds investor, the bonds traders, were not surprised, okay, but actually the bond market were down 3.4%. This is for the S&P 500. So let's take a look at the ES right now. This is let's do a naked chart over here. S&P 500 futures. Okay, in case you are new over here, I'm using the futures chart. So on the futures chart, okay, the ticker is actually ES futures are ES, not the SPX ticker. This is the cash spot index. I'm using the futures. Okay, so during the Jackson Hole that was on the 26th of August. All right, so over here you can see my vertical line. Okay, so previously I mentioned that 4120 should be a strong support, right? So 4120, I removed my drawing previously. So it's 4120 because of the volume profile. So market indeed do bounce up a bit. At that point in time, I also do have some down position because of the Jackson Hole event. I don't know what will happen. Some of my long positions, I actually took partial profit and then just trail my stop to my entry price. So subsequently, my entry, my position just get stopped out because of that. So generally, I'm still in profit because, I throw my stop, took some profit, so it is fine. But, this market actually dropped 3.4%. And subsequently, everything just dropped all the way, until today, there's a kind of rebound over here. But if you actually look at the bonds market, like this is the 26th of August, right? This long bar over here, right? This long bar over here, all right? So you can look at the 30 years treasury bonds, 26th of, August, all right? Can you see over here, okay? Not much movement, okay? Not much movement. The bonds trader investor is actually not surprised on the hawkish stand of the Federal Reserve, okay? And then Treasury notes, okay, also not much response over here until the next few days price just continue to head downwards lah, okay? And of course, what I'm looking at right now, okay, the market, there's a very high probability that Jerome Powell will increase the interest rate to 75 basis point in September. So this is the rate hike probability. I'll post the link in the comment. Right, I actually shortened the link. So I shortened to bit.ly/target dash rate. Easy for me to remember and easy for me to find also. Right, so I can see that there's about 200 people in the room right now, only 40 likes. Okay, can you please help me to just give me a like, share, or comment. If you don't want to share, doesn't matter, just give me a like. Liking is free, doesn't cost you money lah. Okay, can give me a like, but it really helps me a lot in letting other people know about this MarketWise Asia, this Facebook Live, and also this YouTube live streaming as well. So this is the CME group, all right, the probability of the Fed target rate, right, the hiking rate, right. So you can see that, hey, actually they changed already. But actually this afternoon I saw was actually 75%, but this time around it is dropped to 58%, but it is nevertheless, still pretty high. So there's a 60% chance that the Fed will increase 75 basis point in the 21st of September meeting, okay, 21st September, 75 basis point to increase the rate to about 3 to 3.25%, 300 to 325 basis point. So if you understand what I'm trying to say, okay, just type 75 in the comments, type 75 in the comments. So about 60% chance it's going to be hiking 75 basis points. That is 0.75%, 0.75% over here. I think you guys should know last week I also mentioned the probability, the chance is also about 60% chance. All right, so thank you so much for all the comments. So another thing that I'm looking at right now, okay, which is the TLT. This is the ETF, like the ETF, the TLT, the 20-year, TLT, sorry, how do I type ETF? TLT, this is the iShares 20-year plus Treasury bonds ETF over here. As I mentioned over here, right, the 26th of August, okay, basically not much reaction also, all right? So, but what I want you to notice is that, okay, what do you think the price action is doing right now on the chart right now? At one glance, okay? So on the left-hand side, I remove this drawing, but on the left-hand side, since the start of the year, when the treasury bond prices, okay, drop, okay, which means that the yield, right, actually increases or not, because they have an inverse relationship between the bond price and also on the yield. So when bond price drops, the yield increases. When the yield drop, okay, but vice versa, okay. So bond price increases, you go higher. When bond price goes up, okay, yield goes down, okay. So Benson is saying double bottom over here. Yes, possible over here. So this is a very impulse move since the start of the year for the bonds market. All right. Any other answer beside Benson? What can you guys see right now? What do you think the price is doing right now? Benson say double bottom, nothing wrong. Okay, possible also. All right. Any answer or not? Well, I'll take a sip of water. So once again, if you're watching this, right, we have about 240 people. Give me a like, share, or comment. Liking is free, doesn't cost you money, but it really helps me a lot to push out the content to other people. Okay? No comments. Okay, never mind. I don't want to waste your time also. But basically, what I'm seeing right now, is that the Ethan is saying testing demand zone. Okay, how do you define demand zone? Okay, yeah, is it a support area? Yes. Consolidation. Yes. Minko. Ivan is saying at resistance level now. So what I'm seeing, like general as a big picture, this is a very clear cut downtrend, right? So right now it is not so clear cut. Yeah, sideways. Nico says sideways. So yeah, sideways. Ranging right now, not so obvious what the market it is going to do. So that since the start of the May, start of May over here, vertical line over here, right? Since the start of May, market has been kind of ranging, right? So it's unsure what it's going to do. Of course, price could break down like that or continue to head higher like that. Okay, so nobody knows, but judging from this price action, okay, this is quite crucial over here. So right now we are in a range. Okay, if okay the bond price, especially like for example TLT, can stay above this swing low over here, okay, I think we are still pretty okay in terms for the equities market. All right, if the treasury bonds, okay, the bonds market continue to make an impulse move later down, okay, which means the market is pricing in that the Federal Reserve, the Fed, will increase the interest rate even more, because when the bond price drops even further more, which means that the yield will increase higher. Correct or not? If you understand what I'm trying to say, just type yes. Just type yes in the comment. So right now we are still in a trading zone. As long as price don't break below this swing low over here, I think we are still pretty okay for now. For now, at the moment in time. Okay, for now. All right, and I also want to share with you that yeah, talking about the two-year yield and such. So right now, the Fed fund rate and two-year yield is pretty similar. It's like a proxy to one another. All right, yield, bond price, all these are very related to each other, right? So let me go through the two-year yield over here. Where is it? All right. So this is the two-year yield over here. Can you see that? It has been going up, all the way over here. All right, all the way over here. All right, kind of ranging like the TLT also. So right now it seems that it is actually kind of rolling over, which could potentially be good for the equities market right now. And this is like it depends on how you see the market. So let me do a poll right now, since we have about 260 people right now. Okay, do you think the EU, the interest rate, will continue to go higher, or do you think it will come down? All right, if you think it's going to go up, all right, the 2-year yield, 10-year yield, whatever it is, just say 2-year yield. Okay, is it going to go up? You just type up. You think it's going to go down? You just type down in the comment. I want to have some consensus with you guys, so that at least I know what the masses you guys are thinking. Okay, don't be shy. Just let me know, is it up or down, up or down, up or down. Okay, if you think it's going to go up, just type up. Is it going to go down? Just type down in the comments. Okay. I can see some a lot say up. Valerie say down. Okay. All right. Dave say down. Mostly say up. HS say down also. Mostly say up. Okay. Gary, long time no see you. Yeah, Gary say down. All right. But okay. To be honest, okay, I don't know the answer. But my guess is that it could be heading down. It could be heading down, at least for the time being, within the next one month or so, 1 to 4 weeks. That I don't know, okay, but about that. All right. So if you take a look at the What is it? In the divergence indicator over here. Okay. So you can see that there is a, oops. Yeah. All right. So you can see that there is actually divergence. So actually is going higher, but actually it's coming down already. So there's a divergence. It's not as strong as previously anymore. And it seems like it is holding on as a kind of a wedge over here. So price could roll down. All right. And judging from the US dollar that I'm seeing right now, okay, intermarket analysis doesn't mean that I'm right. I'm just trying to piece up different things together to see what could be the probability. Probability doesn't mean that 100% right, just probability P. Okay, just type P. Type P in the comment if you understand that. Okay. So USD over here, USD, this is the dollar index. US dollar index, where is it? Okay, dollar index over here. All right, dollar index over here. Okay, so if I zoom into the monthly chart, all right, can you see that it stretches back to about year 1973, okay, 1973, okay, until now, okay, 2022 until now, we can see that the US dollar is actually in a secular downtrend. I mean that from the chart, you guys can see that it is trending down, right? It is quite obvious, right? But you need to understand that this is a very long-term time frame, okay? Monthly chart from 70s, okay, to the right now. So, but if you zoom in right now to very current state, of course, this is an uptrend, okay? This is an uptrend, okay? You go back to the daily time frame, and this is definitely an uptrend over here since the start of the year. Okay, and because when interest rate increases, okay, the currency, okay, of itself, okay, will also appreciate because interest rate increases, people demand more for the currency as well. Okay, they can put in fixed D, in treasury bonds, in other lesser risk asset classes, they get higher interest rate. Okay, so they want to put more. Of course, US dollars is also the reserve currency. So when the interest rate actually the interest rate increases since the start of the year, okay, US dollar also increases. So generally, when interest rate increases, the currency also appreciate, right? Correct, no? Appreciate. But right now, we are kind of hitting the tail end of this channel right now. Okay, channel right now. So I suspect, okay, there is a possibility that this US dollar might come down. Okay. Again, it might not come all the way down like this. What I'm saying that it might come down, eases the equities market a bit, and also which means that the investor and traders, right, the smart monies are thinking that the yield might not climb as high as the people might think that it could be. Okay, do you understand what I'm trying to say now? So which means that if the interest rate continues to go higher, then of course this US dollar will continue to surge higher. But personally, my opinion is that at least within the next, I don't know, 1 or 2 months or so, it could roll down. So which means that the dollar index will roll down a little bit, okay? And then also the US EU, the 2-year EU, okay, might come down also. All right, can? All right. So if you understand what I'm trying to say, okay, just type yes in the comments. Okay. So Payone is asking, what is your understanding of the USD in the long-term secular downtrend? Actually, the answer is I don't know. Okay, I don't know. Of course, the answer given by the standard textbook is that ever since when dollar removed from the kind of attached to the gold standard. Is it last time, you know, $1 they have matched with the gold. So basically it is what's the word to say? I mean, I forget the word what to say is that, you know, they have the goal to, you know, support the US dollar, but after that it is totally fiat, right? So ever since then they just kept printing US dollar as much as they could, you know, on the QE and such. So this led to the secular downtrend. Okay, downtrend. Where is it? Yeah, okay, because the textbook say that it kept printing money lah. So, you know, all the way, you know, generally the USD should depreciate lah. Okay, gold standard, yes. Christopher in the gold standard, yes, correct. But after that, it become totally fiat and keep printing money. So eventually the US dollar depreciate. Okay, of course, the depreciation is relative to other currency lah, because dollar you must compare to other currency. Of course, this could be one of the reasons, but the actual reason I don't know. They just follow the chart, so there's a possibility. Okay, this could come down. All right, and the yield might come down also. Okay, I already mentioned that already, right? Where can you find the yield? Okay, can this is the monthly. It could start to roll, and today it seems that it's starting to roll over. Of course, today equities market, it is also doing pretty well right now. And I want to share with you this. Okay, I think, yeah, that's about all for this. Okay, US sitting in a secular bearish price channel right now. Okay, so you can see from the chart, right? If the interest rate, the yield do go down, this will relieve the pressure on the equities market, which means that, okay, today, because of this yield coming down today, relieve the pressure, the S&P 500, okay, is actually, today, the indices is actually surging right now. The S&P 500, it is up about 1.17%. The Nasdaq is up about 1%. Okay, basically the three indices, Dow, S&P, and Nasdaq, is up more than 1%. All right. So previously I mentioned that 4120 is an important support area, but now it is actually broken. And you know, why is the market stopping at this level right now? Okay, and of course, you know, for the past 1 week or 2 weeks or so, it is really the market technical wise, some technicals are, it is oversold. Okay, it is oversold. It is not surprising that the market might have some rebound. Okay, Okay, not surprisingly, but overall, what I want to tell you that we are still in a downtrend. Later, I will share with you more. But today, just want to share with you why does the market actually stop at this level right now. Again, it is, to me, it is not random. It's not random. Okay, it is not random. All right, and I generally don't like to use the kind of, you know, classical support and resistance level, you know, where this is a support, you draw horizontal line. So I prefer to use volume profile. So Stephen is very sure there is a dead cat bounce over here. We are very, I mean that your opinion is that dead cat bounce. It could be. I also don't know, but you know, based on the, let me just go through the volume profile first. All right. No, it's over here. It's over here. So from the peak in January to until right now over here. All right. So can you see that, you know, this is the volume peak over here, or this is the volume point of control, but in other places there are also different heavy volume at certain prices. Okay, the high great volume transacted at certain prices. So one of these is, can you see over here? Let me try to zoom in over here. Can you see this peak over here? This peak, okay, this peak, high volume area. All right, so it's about 3930, right? 3930 over here, high volume area. Okay, so price today, it is stopping at this area, and then price actually rebounding up today. All right. Of course, if you add in all your indicators as well, it is definitely oversold level. And okay, let's say if the market cannot hold this level within the next few days, goes up a little bit and then come down, okay, the next level you can see, right, another relatively higher volume node. It is somewhere around here, right? Somewhere around here, okay, that it is at about 3770. Oh, by the way, once again, if you just join me, this is S&P 500 futures, not the cash spot index. So the numbers might be a little bit different from the cash index. All right, so based on the S&P 500 futures, okay, this is the numbers, okay, about 4120, 3930, and 3770, okay, 3770. All right, 3770, okay. Also, this is the high volume. The high volume is acting as a support level over here. Okay, all right, so I'm going to remove my volume profile now because I'm going to confuse because too many things on the chart. Okay, so if you add in my usual indicators over here, right, the central pivot range and such, right? So by the way, I use central pivot range, I use the cloud, the green lines are the central pivot range, all these lines over here are the pivot points, and this thing cloud is the Ichimoku cloud. So if you want to know how I set up the indicators on TradingView, you can go to the tutorial here on YouTube over here. All right, so you'll know how to do it yourself. I'll post the link in the comments, or you can, if you're watching this on replay, you can just go to bit.ly/cloud-cpr. Okay, can So previously I mentioned that price need to stay above the central pivot range from 2 consecutive months, right? So it doesn't happen this month. See, I thought it's going to happen already, but it doesn't happen. It didn't happen. Sorry, it didn't happen. So previously, price above the CPR, broke above the cloud. Okay, I thought that maybe the market can hold on to it, and then this month hang on above the CPR, but it didn't. So right now, price is below the CPR once again, the central pivot range. And this is the new month over here. Maybe I use these are easier for you guys to see. Can you see over here? All right. So 1 month, first month above, second month above. I thought it can hold, but it didn't hold. Right now, price is still below the CPR already. Okay, which means that let's say if I want it objectively to think that the market is in an uptrend again, it needs to take at least another 2 months. It needs to take another 2 months. Price need to be above the central pivot range for 2 consecutive months. Which I already mentioned previously. I think I'm long-winded, okay? But please bear with me, just in case, for those who are new to me, MarketWise Asia, they don't know, okay? Again, just a very quick one, right? When there's a market correction, price above the central pivot range for 2 consecutive months, stay above, okay? Price went on to have a higher high, uptrend, all right? And then over here in the 2018 market correction, 2 consecutive high, okay? No, 2 months of price higher and above the central pivot range, market goes on to a higher high and become an uptrend over here. Over here, a minor correction over here. Okay, it is the same as well. Price above the central pivot range for 2 consecutive months. Price went on for a higher high. All right, and then there's also a correction over here. Okay, price went on a 2 consecutive months of central pivot range, and then price went on for a higher high. Once again, over here, there's a correction over here. Okay, 2 consecutive months. Okay, went on higher high. So you can go on to check, not 100% all the time, but I think high probability. So which means that this time round, price it is below the central pivot range right now. So let's say if this month the CPI is over here, right? price need to stay above the CPR. And then, okay, in October, price stay above the CPR for another month. And then I will say that price is in a uptrend in November onwards. Okay, so price need to at least go higher for another 2 months and stay above the CPR before I can call it an uptrend. All right, if you understand what I'm trying to say, just type two in the comments. 2 consecutive months of above the CPR. Just type 2 in the comment, which means that okay, there's a high chance that maybe price will coincide with November, and then the center rally will push the price higher. Okay, so right now we still need to wait. So don't be too anxious, to go long. I mean that short term wise, you can do swing trade. You want to go long or go short. It is fine. Okay, but if you're doing position trading, holding for more than 3 months to 1 year, that kind, then don't be too anxious to go long now. Okay, you must be quite selective. All right. So if you add in the cloud right now, what I've always been using, okay, short term wise, okay, we are above the cloud, so there's a chance that price can continue to go higher, okay, based on daily time frame, but we are still below the CPR, so it is not so bullish. And if you look at the weekly time frame, all right, weekly time frame, okay, all right, we are definitely long term, we are still in a downtrend. So like Stephen said, it could be just a dead cat bounce. Price can continue to go down lower. Nobody knows, nobody knows. Okay, so maybe I just do the cloud easy for you guys to see. Okay, just the cloud only. We move all the line over here. Oh, over here. Yeah. Okay, so uptrend, downtrend, just a very steep correction, retracement over here, and then price come back down again. We are still below the cloud. Nasdaq, it is also the same. Can you see? Okay. All right, we are still below the cloud. Even if you put in a 2-day time frame, which I use also, not common. All right, we are also still below the cloud. So longer term time frame, long time frame, okay, within the next 3 months or so, okay, we are still overall in a downtrend. We are below the cloud, downtrend, below the cloud. Okay, Ken. All right. What do you mean by 2 daily time frame? This is a 2-day time frame that I'm looking at lah. Okay, so yeah, something that to give me another perspective. All right, and yeah, so just a recap over here. Short term wise, the market can bounce higher. All right, so the immediate resistance is at near the pivot point lah. Okay, the CPR, which is at about 4080. Okay, cannot draw the line. Okay, so it's at 4080. So let me put the line over here, horizontal line. Yeah, okay, okay. I didn't put the drawing mode on. Sorry. Okay, 4080. Okay, 4080. So price could maybe go a little bit. Okay, 4080, and then we'll be hitting the supply zone. Okay, there will be overhead supply. There'll be resistance over here. All right. So we won't know how price will react at this level, 4080 futures price, 4080. Okay, so if you are long, if you are buying something, okay, short term wise, when the indices hit that level, you might want to consider to take some profit off the table or just take full profit. Okay, all right, so this is just my personal opinion. So short term wise, we could be heading a little bit higher, but after that, we have to see the price action. We don't know how price might react. Price can break above higher. Of course, that'll be good, okay? And if the yield continue to go down lower, but of course, price can continue to go lower. But generally, as long as price don't break the June low, I think it is fine. I think it is fine. So there's also a possibility, okay, that within the next 2 months, as I mentioned in this seasonals, right? September, October, generally not a very good month. So there's a possibility that, within these 2 months, price can just do a kind of ranging until November, then price might continue to head higher. Okay, of course, this is the best scenario. Now, of course, another scenario is that price can just continue to just crash all the way. All right, understand so far? If everything is okay, just give me a thumbs up. Just type yes in the comments. Okay, type yes in the comments. All right. So another thing I want to go through with you, it is that Stefan, I'll go a bit later. Okay, let me go through my things that I want to go through first. Okay, Ken, if I forget, just remind me again. I think you asked me a few times already, so I will answer that later. Okay, Ken, Stephen. So I want to go through with you. It is this. Previously, I mentioned that there is a breadth trust, right? So the breadth trust is the above the 50 days moving average. Okay, so this is the breadth trust over here. Percentage of stocks above the 50 days moving average. All right. So prior to that, okay, as I mentioned, right? So when the market is very bearish, hit that kind of a very low level, the market breadth, when very few stocks are above the 50 days moving average, the market breadth, right? Okay, when there's a trust suddenly move up very high, very fast, okay, which means that sudden trust, okay, and then like 2020, the COVID crash, there's a trust, okay, and then in 18, after a huge market correction, okay, and then there's a trust, okay, and if you go through the history, there are people, on Twitter and everything talking about this market trust, the kind of historical data. Normally, after the market trust, right, it is a good sign, which means that the market, there's a very high chance that this is like the end of the correction, the end of the downtrend, and the market can continue to go down, to go up higher. But at what point in time, okay, will this breadth trust invalidated? It's not true anymore. Okay, let's go through some data, some data over here, right? So is it still valid or not? So this is a breadth trust, right? Okay, it trusted up, but the market after that is going through quite a steep correction, like of now, right? Correct. As of now, right? After it went up quite a bit, okay, quite a bit. There's a trust over here, very strong uptrend, and then come back down, okay, very fast. So let me go through this wait a while over here. Okay, so this is the one that market breadth is the same as what I showed you just now, the percentage of stocks above the 50 days moving average. So can you see that, back test all the dotted dot. You can see that every time there's a trust, the market just continue to go higher. There's a trust, go higher, okay, go higher. There's a trust, sudden trust, okay, go higher. There's a trust, go higher. COVID crash, go higher. Right? So right now, at this point in time, we also have a breadth trust, okay, go higher. So subsequently, after all this breadth trust, right, they will bound to have some correction. So what is the average correction, okay, after all this market breadth trust? Okay, so this is the kind of trust over here for the past, I think since 2009 over here. All right, 2009 over here. I don't know whether you can see or not. Never mind. Okay, I think yeah. Okay, I think cannot see at the bottom left corner, right? But doesn't matter. Let me try to remove it. Okay, you guys can see, right? So after the vertical lines over here are the breadth trust over here. After the breadth trust, there's a average correction, 5%, move higher, very low correction, 1.9%. And in the 2011, 2001, the Europe debt crisis, okay, after the Brest trust, the correction is a bit steeper, 9.8%, and then it go higher. After that, Brest trust, average drop 3.5% and go higher, drop 2.2%. After COVID crash, it dropped 5.2% and then go higher. And then right now, it dropped about 7.5%. Okay, 7.5%. So there's a chance, okay, that price can still go a bit lower, but this Bref trust, it is still valid because, during the 2011, after the Bref trust, right, the market actually corrected about 9.8%, about 10%, okay, and then continue to move higher. Okay, so right now it's still about 7.5% over here. So if you look at the chart over here from the top to the bottom, okay, about 7.5%, 8% now, okay. So if 9.8%, okay, if let's say if history do repeat itself and really after the Bref trust, drop 9.8% over here, all right, so which means that 9.8%, all right, 9.8%, we still can go down a bit lower over here, okay. Actually, also somewhere around here lah, okay, actually it's somewhere around here. Sorry, actually it's somewhere around here. From the top to the bottom, yeah, 9.8%, yeah, okay, it's somewhere around here. So right now, after this, then price started to go higher, rebounding now. All right, rebounding. So I think this Bref trust signal, I think is still valid. It's still valid as long as price, don't break below the low of this June swing low lah. Okay, don't break below the low of this swing low. So can you guys understand what I'm trying to say? Can understand or not? I mean that this Bref trust and the correction level, I mean that is it too cheap for you? Is it too difficult for you to understand? If everything is okay, just type okay in the comments. Just type okay in the comments. Okay, well, I'll take a break. I think quite some time already. Type okay in the comments. So for those who just joined me, right now we have about 270 people in the room, both on YouTube and also on Facebook combined. So once again, all right, just some short announcement. Okay, before I continue, we have this Market Insights Virtual Summit that's coming up on the 29th and 30th of October. All right, Tom Basso, it is the keynote speakers talking about the all-weather portfolio, and he's also one of the market wizards. All right, so do head over to this link in the comments over here. All right, I'll post the link in the comments. So actually it's Basso, bit.ly/Basso2022. I posted the link in the comments and you'll see this page. Just pre-register now, your interest totally free. There'll be other great speakers as well, and you'll receive exclusive bonus materials and reports that's only available for you if you pre-register for this event. You get this material earlier, much earlier than the rest of the other people. So key in your name, email address, and mobile, and you are good to go. All right. And if you are still new to MarketWise Asia, just join me. Do subscribe to our Telegram channel and also our YouTube channel. I'll post the link in the comments right now. All right. Kenna, and thank you so much for all the okay. All right. Darius say, indicators say can go up, some can go down. What is your overall opinion? My overall opinion, I think that I am quite objective. I'm quite objective. Basically, I'm a swing trader. So short-term trade, I try to be as objective as possible. Long-term wise, I have no freaking idea how the market will pan out. Will it be a prolonged bear market? It could be. Long-term can be a very bullish bear market, a bull market. It could be. Okay, but if you have been following me, I think you should find me quite objective. I am not a kind of very stubborn bull or stubborn bear. You can see always people say that, oh, the market has, the Fed is printing too much money, the market should go down, fundamental reason, or all this, a lot of reason to why the market can go down. Of course, right now the market went down. Then they will say that all the fundamental reasons are right because the market come down, right or not? But you don't forget that for the past 12 or 13 years, ever since the 2008 financial crisis, every single year, there are people calling for a bear market because they say that too much money or printing money lah, too much loose monetary policy lah, but the market kept going higher and then they all keep quiet. Correct or not? It's just because right now the market go down and they think that they are correct. Okay? It doesn't mean that they are wrong. It's just that the narrative right now, okay, fit them perfectly because the reasoning plus the price action is coming down all fit perfectly for a bear market reasoning. Okay, but for the past 11 years, okay, 12 years, market has been going up. Also very loose monetary policy and such. Okay, but then you can say this time is different. But again, I would say that every time you say this time is different, then that's a very dangerous word. Okay, if you don't understand what I'm trying to say, never mind. Just think that I'm talking cock. Anyway, yeah. So I'm not a stubborn bull. I'm not a stubborn bear. So if let's say, for example, if the market tells me that it is a bearish bias, then I will stay bearish. So right now, price is still below the central pivot range. My bias, as I mentioned in my Telegram channel over here, in my Telegram channel, I say that the market, it is actually below the CPR, right? So bearish bias lah. Okay, bearish bias. But short-term wise, you want to go long, go short, it is fine. Until price can stay above the CPR for 2 consecutive months, and then I'll go bullish. Along the way, swing trade, I'll take profit and such lah. Okay, so I'm not a stubborn bear, not a stubborn bull. When it's time to turn bearish, I will switch and turn bear. And when it is going to be a bull market, when price above the CPR for 2 consecutive months, I will turn bull. Then all the fundamental reason will go aside already. You can tell me the market, quantitative tightening, interest rate going up and all this, I don't care anymore. I will follow what the price action tells me. All right. Can? So, another thing I want to, forget to tell you, this is pretty important also over here. I'm also looking at the ratio between the utility sector and the S&P 500. S&P 500 and the SPY. So, let me go through this thing first. I'm not show you the chart, okay? So it's testing the top of the secular bearish price channel. And of course, utilities is typically seen as a defensive sector. When the overall market drop, okay, you will not drop so much, or instead you can even go higher. So it's a defensive sector, which means that you outperform the market when the overall S&P Nasdaq, it is going down. So this is the ratio chart that I want you to take a look over here. So it's XLU utilities / the SPY. All right. Can you see that? Okay, I'll go to the weekly chart over here. So this is a ratio chart. This is a ratio chart. XLU / SPY. Ratio chart. Can you see that? From 2003 until about 2007 in a secular channel up. From 2011 until now, it is in a secular channel down. All right, can see, right? So if I add in the S&P 500, okay, apple to apple comparison, I'll just put the SPY. This is S&P 500, right? Okay, so it is seen as a defensive sector, right? So when it is actually, performing well, okay, performing well, going up, going higher. See, the market is generally in a correction mode, okay? All right, can see or not? In a correction mode. So over here, it is the same as well. Going higher, it is a correction mode. Going higher, it is in a correction mode. And of course, during the COVID sell off over here, when it hit this yeah, zoom in. Oh, cannot shift this thing, never mind. So can you see that it hit this how to shift this thing? Never mind, okay, just follow me over here. So can you see it over the channel over here when it hit the peak, okay, the market will go on for a bull run over here. Hit the peak, market go on for a bull run. This is the COVID crash, hit the peak, go for a bull run over here. So can you see that the utilities hit the channel over here at the bottom over here, okay, and then the market go down over here. So right now we are again very near, okay, not say very near, like almost there, somewhere near the top of the channel somewhere. So if the price can go a bit higher, touch the peak and then roll down over, all right, there's a high chance that the market can continue to go higher, because after that it is a risk of, because nobody wants, because which means that the XL is underperforming the S&P 500. Do you understand what I'm trying to say? Right now, if it goes up, the utilities is outperforming the S&P. If it comes down, it is underperforming the S&P, which means that the market, it is on a risk on mode, okay, and then the market might go higher. So as of now, it is still going higher, and this is a weekly chart. This is a weekly chart, which means that for it to hit the channel over here, it might take a few weeks or so. I don't know. It can take 10 weeks, 1 week, 2 weeks, 3 weeks. I don't know, but I believe maybe like this 3 more weeks, that kind, price hit there and then go down. Okay, that kind. All right. Is this interesting to you or not? you go and take this ratio chart, XLU and SPY. Go and do it yourself and see the pinpoint, whether the high and low. It is quite interesting. Okay, quite interesting. If you think this is something new to you, you find this interesting, okay, just type the letter I in the comment. If it's something new to you, just type letter I to you in the comments. So again, the market can range bound a few more times, a few more weeks before it hit the channel over here. All right, so we shall see. Even right now, okay, it is still continuing to hit higher. So maybe it might take a few more weeks for the market to stabilize, maybe 2 weeks, 3 weeks, 4 weeks, until maybe November. Then the market can continue to surge higher. All right. So right now, market is still uncertain, but based on this or that, I think pretty good chance the market might hit higher if it hit the channel over here lah. Can? Okay. So yeah, so this is exactly what I'm trying to say today. This is pretty important. So interesting discovery. Okay, this is the ratio chart between the XLU and the SPY. All right, so I think Stefan is asking me about gold, right? So for gold, today is actually rallying right now, right? So it is because there's the dollar index is actually coming down lah. Can you see that? Normally the precious metal and the dollar, okay, there has an inverse relationship, because when price is, when the dollar is appreciate a lot, is high in value, right? It take the price of the gold will come down, okay, and when reverse it will go up, right? You can check out the relationship. It is like this, okay. And then generally, if you see that the dollar index, this is the dollar index, where is it? Yeah, okay, it is kind of not exactly rolling over, but it's a bit toppish, okay, like could be coming down. Okay, for the gold and silver to really go up and rally, I believe the dollar need to come down, Okay, then the gold might have the chance to surge even higher. So right now, gold, silver, precious metal, they are in a downtrend. Even with no indicators, you should know that it is in a downtrend. Okay, and again, this is I think, yeah, this is a long-term trend line that I've drawn. So somehow today, it just hit nicely at this trend line. Okay, and then seems to rebound higher lah. All right, and add in the usual indicators. Okay, it is in a downtrend. It's in a downtrend, right? In a downtrend below the cloud, below the central pivot range. So once again, if you want me to go long on the gold, for example, price need to be at least above the central pivot range lah. Okay, so right now it is still not above, so I think there's no reason for me to go aggressively long lah. Okay, short term wise, again, to catch the swing trade, up down, go long, go short, I think it's fine lah. But if you want to hold on for longer term position, I think price need to stay above the CPR consecutively lah. Okay, Ken, Stephen, all right. And for me personally, if you take a look at the seasonals, right? Seasonals over here in September, right? Actually, energy utilities is actually doing pretty well. 67% of the chance is moving higher, when over the market it is actually weaker. Of course, as I mentioned, right, utilities is actually defensive sector. So overall, September, when the market is not doing well, like defensive sector like this, usually tend to outperform the rest of the indices. Either it went up or it dropped lesser than the index. Okay, so for me personally, I think yesterday I actually went long on the utilities. Okay, utilities. Again, I'm not sure how it will pan out. So right now, just now it was in pretty good profit, but right now there is a long shadow over here. Okay, so I don't know how it will pan out, but I have a long position in utilities. So we shall see how it goes over here. And the other one that I have is actually CBS. Okay, doing also pretty okay, but there's a shadow over here. So again, just two long position, just two position. If I'm out, happen to stop me out, then no choice lah. I mean that just two position. I think it's fine. All right, and then yeah, recently I'm more active in the forex market, but right now I do have a short position because right now shorting doesn't make sense to me. I mean that shorting previously I was shorting over here. I took profit lah. So right now I don't think it's a good time to short lah. Market is really overbought lah. So the market is really oversold. Not a good time to short, and the risk to reward is not there lah. So I took the chance to long one or two position. Okay, so this is just what I'm doing right now, just to share with you. Okay, all right. And how about the energy prices to go down if the Russia oil price control? But this one I'm not too sure. Okay, I'm not so sure about the fundamentals on the G7 and the Russia. But looking at the price chart of gold right now, okay, the energy market, it is actually, initially I thought it's going up, okay, but then it also continued to go down lower for the past few days or so. So which means that this is a good sign for the inflation, which means that if price can continue to stay lower at a lower band over here, then there's a chance that the inflation, the CPI data, might stay at lesser than 8.5%, but it is still going to be higher because market ever since August in August, right, price just kind of ranging over here lah for oil. I believe the CPI data will stay up at about 7 to 8.5%, about that range, 7 to 8.5%. Okay, I don't think you'll go above 9.1%. You'll stay elevated at 7, 8.5%. All right, Ken, that's my personal view. So if you look at the energy sector like XLE over here, okay, price is actually hitting a support level right now, holding on at the cloud support. But I mentioned to one of my friend over here, also an MWA subscriber actually personally, I don't like this pin bar. I don't like this pin bar. Okay, I don't like this pin bar. Okay, because pin bar to me is always like a trap. Price can fake you to take long, you go long and then come back down. Okay, will this happen? I don't know. But when I'm unsure, I don't take it okay, especially if this is a pin bar. Pin bar, you can call it a pin bar, you can call it a hammer, whatever you call it okay. And it has gone up for quite a bit since July onwards. So there's a possibility that price could do this kind of complex pullback, go like that, come down, then before it head up again. Okay, before it head up again. Okay, so personally, I think there's a chance that the energy sector might do something like this. Okay, so I'm not so keen on the energy sector right now. This is just my personal opinion, and I don't have a position in energy sector right now. Okay, if price do a complex pullback like that, then maybe I'll be more inclined to go long, but not now. Okay, so this is just my personal opinion. All right, so I think, 1 hour and 9 minutes so far, just slightly more than 1 hour. So if you enjoy my sharing today, if you find value in today's sharing, okay, please type value in the comments. Okay, in the comments, give me some love, give me some like, give me some share. Okay, there are still about 230 people in the room. Can give me some like, share, or comments? Okay, cannot. If you enjoy the sharing today, just type value in the comments. And I believe okay, some of this sharing today, it is actually something new to you. You have not discovered this. Like for example, like the XLU versus the SPY ratio. I believe for 99% of you guys should be new to you Am I right to say that? So give me some like, give me some share, give me some love, like, share, comments. Okay, subscribe to our YouTube channel, like our Facebook page. Okay, share this out to as many people as possible. All right, so I don't think I'll take any more question today. No, any more question today. I think it's pretty late already, and I think I'm pretty sure with my opinion okay. So as I mentioned already, for the S&P 500, okay, right now, short-term wise, there could be a rebound, okay. All right, but overall, we are still overall in a downtrend. I think you need to be sure on this. Can? All right, and based on this ratio wise, there could still be a few more weeks before we can see a bottom of the market okay. Can? All right. So yes, so I think for that, I thank you so much for your time with me today. Thank you so much for staying with me until right now. And again, it is a Friday evening, so I wish you guys have a good weekend ahead. And once again, do subscribe to our Market Insights Virtual Summit pre-registration. Okay, I'll post once again the link over here in the comments. All right, and get the bonus over here. Okay, so thank you so much. I will see you guys next week, next Friday. Thank you. Bye-bye.